How to trade cryptocurrency. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. Cryptocurrency is like a form of virtual or digital money that can change hands from person to person without any institution or organization in the middle to facilitate it. For example, if you want to pay a dog groomer, you'd either need to use cash minted and distributed by the state or bank transfer facilitated by the payer and pays banks. With cryptocurrency, the infrastructure which makes payment possible is decentralized. No single person, group, or interest controls it. Chain of command. It all works using blockchain technology. Blockchains are indelible, digital ledgers maintained by volunteers, governed by communities of ordinary people, and distributed to anyone who wants to get involved. Volunteers offer their time and effort in exchange for the chance to earn cryptocurrency, and encryption technology makes it practically impossible to cheat the system. When you carry out a transaction with cryptocurrency, volunteers around the globe make a record of it in their copy of the relevant ledger. When a certain number of transactions are recorded, a block of those transactions are added to a long chain of previous blocks which represent the canonical history of transactions in that currency. To add a block to the blockchain, you first need to validate it. To do this, you need to either correctly guess a 64-character alphanumeric string with trillions of possible combinations or stake your own cryptocurrency for the opportunity. If you tried to claim there was more cryptocurrency in an account than there actually was, the majority would reject it. In order to cheat the system, you'd have to control at least 51% of the votes on the network. In either case, the cost would be prohibitive. When your block is added to the blockchain, you're rewarded with a small amount of a given cryptocurrency. Ways to trade. Within a chosen crypto exchange, a trader will be able to check current prices for a range of tokens and see how they've been performing over the past hours, days, weeks, months, and even years. Exchanges will commonly show users the tokens that are in trend upwards and in price downwards, popular tokens, new tokens, and so forth. Users can utilize all of this information to decide which coins to purchase and sell. Day trading. Day traders buy and sell tokens within the same day to take advantage of movements in the market. This offers the potential for quick returns and mitigates risks of big price drops from one day to the next. Swing trading. Swing traders hold coins for longer periods of time, monitoring prices of assets over a period of weeks to determine the best assets to buy, sell, and hold. Position trading. Position trading takes a lengthy view on crypto investing. Position traders purchase coins in anticipation of making gains over the longer term and are slightly concerned with day-to-day volatility. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.